What's up, everybody? Zach is back with another episode of Journey to $1 Million. And hey, it's a new week, and we're going to be taking a look at a couple more stocks, some old ones, got some new plays, a reopening play, and the new ARKX ETF that is coming out supposedly this Tuesday. So really, how much money are we going to put into that? And we're going to see what's going on in general with the 10X and whatnot. Let's go ahead and jump right into it, guys. So actually last week was overall not that bad. The 10X was pulled back a little bit, but it's pretty much been flat. It's up and down. I don't really expect it to go more than 1.7%, although it could, but I don't really see that. I think that most of this is already priced in. We had a really good Friday, a good finish to the week. So we'll see how that's going, but the SOXL is actually, let's go ahead and pull this up. It's pecking on the 50-day. We had a really good day. It was up 15% almost. So let's see how that does. We will need to be a little bit careful because we are trading flat. I don't plan on going into the week opening up a bunch of smaller shorter term option plays because we're still flat. And remember, guys, we are flat, we're losing money for options because of the decay. But anyways, we're going to be seeing how we're doing overall. Still, though, on the triple Q, you can see we have been very flat since the 11th. So that is a decent amount of time here. But overall, we're up, and I'm very anxious to cross into the 320 territory for the triple Q past that 50-day moving average. Then I think it starts to get pretty interesting. But anyways, we'll see what's going on. I think it's probably going to be a decent week. Futures seem to be a little bit mixed right now, a little bit down on the tech. But hey, we'll see what it opens up. Futures don't really mean much, as you guys are probably learning. Anyways, so with the economy opening up, and I do want a opening up play, and I don't overall just want to just stick with tech growth and dollar cost average. But in my opinion, the travel and leisure, I don't think that they're going to do as well as people are hoping. I think that now that the businesses are used to Zoom conferencing and just doing everything online, I don't think that they're, especially with the reduced budgets, I don't think that they're going to be as traveling and taking as many business trips as they were pre-COVID. And just going forward in general, I mean, even with the online retailers, like in-store retailers, traditional brick and mortar big box, I don't think that it would do as good because now people are just used to using their phones to buy everything and basically their phones to do everything, no matter if it's Zoom, Amazon, or whatnot. So I think that this is just a transition that was going to happen anyways, and I think that now COVID was just a catalyst really for this shift. So just my opinion that it's not going to be as good as people are thinking. Like the jets or airline companies. I don't know. That's just my opinion, and hopefully I'm wrong. Hopefully they make a lot of money, and hopefully I'm wrong. But I don't see it. I think that people will be a little bit disappointed. But there are two sectors that I do really like, and one is gambling. And I had mentioned this one earlier on the 26th, what to watch for the week. And this is BJK, which is the gambling ETF that includes casinos, casino hotels, sports betting, lottery services, as well as gaming services, gaming tech. I mean, the most notable holdings is Las Vegas Sands, DraftKings, MGM, Caesars, Sands China, etc. So I think that this one could be interesting because overall, with Las Vegas just opening up, and this summer they should see a peak in travel to Sin City, as well as casinos are doing well. Will be doing well when all of this travel does open up. And everybody's been cooped up for a little bit too long, and I think that Vegas will be doing very well this summer. So this is kind of it's an opening up play, travel and leisure, but also play specifically on Vegas, but also DraftKings because this online betting was just legalized last year, so this is also doing very well. DraftKings is a very good pick just as a single stock. If you want to get in a long call, leaps on DraftKings, we were doing things like that before the tech dip. So I think overall this is a really good one. I'm gonna keep my entry and my time frame the same on this one actually. But if you do check this out from my previous post, And this was last week actually. BJK actually did dip down into my buy zone and started coming up. And it was around 56 at that time and that I wrote that. And if you see that the graph here, it actually did dip down into my buy zone and started up a little bit, but I think that there's still some shakiness coming up this week. So we will keep a watch on this one. If it does re-enter the buy zone, retest maybe the 50-day. I'm not really sure how low it's going to go, but I'm going to definitely be watching it and waiting for a push towards $70, I think, this summer. Specifically, I'm interested in the $60, $70 spread. Could be good. I think the maximum upside by the summertime is probably around $70, so there's not really any need to pay for unlimited upside. So I think we can cap that at $70. But 60 to 70, that looks pretty interesting, and it's very cheap. I checked, and it's only $168, and that's for the September. Let's go ahead and pull this up really quick. But that is for the September one. September 17th expiration. And if we look at this, we can go ahead and create a little vertical spread here. And that's what's really good with Webull. If you guys don't have this, you can go ahead and check out the link in the description. And you're going to get 2 free stocks anyways if you sign up and deposit $100. But we can increase, decrease the width, the strike, the expiration. It's all, and it has a nice little profit loss graph. So you can see this is only going to cost us $168, and this is the 60-70 vertical spread. Just keep in mind that we did select vertical spread up here. So yeah, if it does pass $60, our break even is going to be around $61.68, because that's only going to cost us $1.68. And keep in mind, this is at the Friday close, so this is all going to change when markets do open on Monday. But yeah, the downside is maximum is only $168, and upside is $832, and that is if it does get to $70. But yeah, this little profit loss graph is pretty cool that Webull does have. Highly recommend Webull if you are beginning to play around with the vertical spreads, condors, and collars and whatnot, because if you're a visual learner, it's really helpful. But nevertheless, I think a 60 to 70 is pretty interesting, and I would sell it once it gets to a 70. Obviously, there's no reason to keep that because that's the most money that we can make. But yeah, I give this a risk of a 2 because I think this is an ETF, so you have the diversification, and keeping it around 60, 70 vertical spread is pretty safe in my opinion. So risk of 2 on that. 4 to 6 months. Wait for the summertime, maybe the fall. Once those earnings do come out, I think that the casinos and whatnot will do pretty well. But anyways, the next one, the reopening recovery play that I do like is Mastercard. Now, the theory behind this is if everybody does travel, spend a little bit of more money once they're all cooped up and go to restaurants now that restaurants are open, they're going to be swiping with the credit card. So I think, Visa, MasterCard, American Express is pretty interesting, but I looked over the technical analysis and I do like MasterCard on this one because it is just coming off of this dip down to the 50-day moving average. Of course, Visa is similar. American Express is not. American Express is doing better. But yeah, I do like MasterCard because we are trading in a parallel channel right here, more or less. Sometimes it's above it, sometimes it's below it, but we've been doing that since the COVID. So I think this is also pretty low risk, especially if we get a vertical spread. Close to the 50-day moving average right now. It's overall a pretty good buy, I think. And yeah, I put this as also a risk of a 2 because, it is MasterCard after all. It is a multinational financial service corporation, and there's a lot of plastic that has MasterCard on it nowadays. But specifically, I think their credit card business will be doing very well. And yeah, again, I kind of like vertical spreads here. I set a smaller target at only $413 because that's basically at the very tippy top of this parallel channel, which I do think it's going to hit relatively soon. I personally think it's going to be 1 to 2 months can hit that, but to be a little bit safer, I think give yourself a little bit more time, 2 to 4 months, especially since we're talking about a risk of a 2. But an entry less than 360, I think is pretty. I don't think it's going to be very hard to catch that in the next couple of days, I do believe. But be watching that if you're really into getting away from tech, getting away from growth a little bit more, diversifying your growth and innovation portfolios. This is a pretty good one to do that with because it's overall it's a safe play. Visa, MasterCard, something like that. But I specifically like MasterCard though. So yeah, and then the next one is going to be Buzz, B-U-Z-Z. This is the social sentiment ETF. Now it is a new ETF, and here the top holdings are actually is another one is DraftKings, Twitter, Ford, American Airlines, Facebook, Amazon, Apple. AMD, Netflix, Tesla. But this is like the social sentiment. So what is popular, what is hot right now, what are people talking about, which I don't really care about that because I'm not into meme stocks, I'm not into YOLOing, I'm not into the diamond hands. But if you look over these holdings, you got Pfizer there, we got Plug, Boeing, so this is a really good mix of, it seems like half tech, half growth, and half of the opening up plays. I mean, it's got the American Airlines, it's got Boeing, so it's pretty interesting. Also some semiconductors, AMD. I mean, overall, the holding, I really do like the holding on this one. I don't care if it's social sentiment, buzz, whatever. It is a new ETF, so be a little bit careful. There's not really much action that's been going on. It kind of went up to around 25 and it's back down to what it opened up at. So I think this is a really good buy, in my opinion. I think this one can easily double. It's hard to say when it would double because this one is really new. And the last time I talked about this one, I didn't even give it a price target and entry. I would just say start dollar cost averaging into commons. Possibly could get a leap on it. And really it's going to be up to you to create it, but I went ahead and put a risk of 4 because some of these are a little bit risky, especially a lot of tech heavy, also Tesla, and some of those airline companies I would be a little bit careful of, even though I know a lot of people like those plays right now. But I'm a little bit skeptical on them. So overall, I think skepticism is good, but this is a good play. I really do like this one. I want to put some more money in it. And again, it's a risk of a 4 because it's a little bit new, and some of these are a little tech heavy in this tech dip that we're having right now. But let me know what you guys think in the comment section. Go ahead and smash that like button too while you're down there, and subscribe. I do videos like this all the time, and I try to do extra videos about some tutorials or go over my portfolio holdings and whatnot. But anyways, and then another one I really like, and this one is pretty interesting, is Nike. And probably what you've heard, Nike has come under a lot of pressure from the Chinese netizens, along with a handful of other foreign companies in the Middle Kingdom. But this is all stemmed from a ban on the Xinjiang cotton, which Xinjiang is a province in northwest China, if you guys don't know. But it has the Muslim minority there, and there's a lot of tension with the Muslim minorities in China for the past couple of years. And I don't want to get into too political, into politics too much because I don't really like politics and whatever. So I don't want to get into that, but it's down. Nike's down. I think it's a good buy. And this is going to blow over. I mean, I see there's people are just really freaking out in China. The Chinese were, and geez, it's pretty amazing, even though this ban on Xinjiang cotton actually happened last November. So that's just really weird overall. But, I think this started up from the meeting between China and the U.S. in Alaska last week, or the week before, whenever it was. And, not very friendly with each other as always, but hey, it is what it is. And Nike, Adidas, and a lot of those H&M, just a lot of companies are really down right now. So I mean, I walked around on the streets. Nike stores are still open because I'm actually in Shanghai right now. Just in case you guys are just following me, you just found my channel or whatever. But I'm actually in Shanghai, and the Nike stores are still open. People are still wearing Nike shoes. Some weird people are burning their Nike shoes. But overall, everything is normal. It's not a big deal. Just some people online just blow it up, blow it out of proportions. So in my opinion, this is going to blow over soon. But I gave it a risk of a 4 to 5, just because I want to get a short-term option on this. I want to get in. I want to get out. I want to make my money. I want to see Nike bounce back. Because, oh my goodness, it went down to the 180-day moving average when this news hit, which is not really that much. I mean, literally, the Chinese thought that they were going to just crash the U.S. economy at one point last week because of the ban on the Xinjiang cotton. They're boycotting a lot of these foreign goods, but yeah, they still love Nikes and Adidas. So I think that this is way blown out of proportion, and it's just talk. So I think this is a super good buy. I want to get a short-term call. I want to ride it back to the normal pre-Xinjiang cotton news level and just see how that goes. But I did, again, put it at a risk of a 4 to 5 because you never know. Sometimes China can be unpredictable. So just keep that in mind. But hey, I think it could get back up to 145 in a month or two. I think this is a pretty good. Don't put so much money into it. Even do a vertical spread, save your money, take less risk. But overall, I think this is a really good play. And then the last one, probably what all you guys have been waiting for. And I should probably do a separate video for this, but hey, it is what it is. I'm short on time because I'm pumping out these due diligence and the Reddit posting and whatnot. Follow me on Twitter. Follow me on Reddit. That'll be cool. We do have a new subreddit. It's reddit.com/r/prostock. just pro stock. That's it. And feel free to post your questions, post your plays, just any due diligence that you're doing yourself. I'm not going to delete people's posts. I'm pretty inclusive for everybody. I don't really care. I mean, it's silly. I don't think anybody's post should be deleted or whatever. But anyways, so the ARKX, and this one is supposed to launch Tuesday, March 30th. So this is just, I'm super excited about this. I've been talking about this for a long time. It's a space ETF, space exploration ETF, managed by ARK Invest, Kathy Woods. This is just all like buzzwords, I feel like. But pretty much this one is going to be really big. I think this is a long-term play. The question is, how much money am I going to put into it? We don't really know what the holdings are going to be, and we're not going to know until a few days after it launches. But I'm going to buy it as soon as possible. I'm going to buy as much as I can. I'm not going to go crazy. But, yeah, I'm going to buy as much as I can. I'm going to buy as much as I can, to be honest with you. I don't know if I'm going to do leaps or comments, but nevertheless, this is a long-term hold for me. Years I'm going to be holding this, and I think in 5 to 10 years this is just going to print. So if you got any extra money, I'd throw it in. Might as well. Even if it dips down a little bit, because, it's space. It's probably a little bit more volatile. If the economy does go down, the space exploration is probably going to be one of the first things to go with it. But I could be wrong about that, but just usually that's how it was in the past, looking back at past history. But hopefully this one does real. I'm thinking about dropping 20, 30K on it. We'll see how it goes. I don't really know, guys, but hey, that's all I got for you guys today. I mean, didn't say so much about ARKX, but there's not really much to say. I'm just going to buy and see how it goes and just hold it for the rest of my life, I guess. But I definitely want some of it. Leaps, comments, I don't know. But anyways, I really do appreciate you guys. And remember, if you're just joining, the risk scale is on a scale of 1 to 5. 1 is the less risky. I'd put the most money into it. I'd feel comfortable putting the most money into it. 5 is, well, I would just do vertical spreads on, or maybe some safer strategies, put less money into it. Overall, a little bit more risky. And that's just my style. You guys feel free to do whatever you want, obviously. But I really do appreciate all the support I'm getting on Reddit. I do appreciate the support on Twitter. Make sure you're following me on social media. Links in the description for the Webull. 2 free stocks if you deposit $100. But subscribe and smash that like button. Anyways, guys, I will see you on the other side. Peace.